A man that is, of course, right across that issue, CEO of the Australian Pork Limited, Andrew Spencer, joins us now. G'day, Andrew.
G'day, gents.
Now, Andrew, you can paint for us exactly the situation that is confronted by your industry at the moment.
Well, we have a normal seasonal price pattern that after Christmas demand dries up. We see in most years a bit of a drop in pig prices through that March, April, May period. What's happening this year is a little bit more concerning because the steepness of that price drop is probably more than we'd like, more than what we see in most years. And it's getting down to levels now where producers are starting to worry about their profitability just as they were, 2 to 2.5 years ago.
Well, then to what do you owe that price drop, Andrew?
Well, we've basically got a situation where imports have continued to increase month by month by month for the last, nearly 10 years probably.
Sure.
And that has once again run domestic pig producers' supply head on with each other. So Here we are. We had a bit of an undersupply after a crisis 2.5 years ago where a lot of producers got out of the business and reduced pig production. And now they've been suddenly getting back on their feet and increasing again, and we've got imports getting higher and higher, and the two have run into each other. We've got a bit of an oversupply situation. So there's nothing that damages prices more than a bit too much supply.
Andrew, how many less producers than, say, 10 years ago?
Well, in 10 years, that would be quite a number. What's happened in the pork industry over the last 50 years has been enormous consolidation. If you remember when pig farming was basically an add-on to the dairy industry, we had something like 50 to 60,000 pig producers back in the 60s. Today, that number, in terms of serious pig producers, is probably down around the 800, 900 mark. 10 years ago, it might have been 2,000 to 3,000. So it's a quickly changing industry, very much consolidating.
Yeah, I was brought up on a farm, and I think that ourselves and all our neighbours all ran a few pigs. So for a lot of people, it was just a bit of a sideline, bit of extra cash flow. But it's become a very specialised industry. Where are most of the imports currently coming from? Is Canada still the major source?
Well, Canada, the volume of imports is basically split almost evenly three ways between Canada, Denmark and the US. But it's different products coming from each. Most of our middles, what we call pig middles, which are used for slicing up into bacon and processing, they're coming from Europe, and that's because middles in Europe aren't the highest value part of the pig. The legs are over there for all their beautiful hams and things. It's a different situation in the US. Their market is driven by the grilling cuts, so they use up all their loins and middles, but they don't have much to do with the legs. So they send their deboned legs to Australia, and that's what makes up the imported ham that we get here.
Well, Andrew, I mean, there's a great many domestic industries in this country now that are fighting with imports for market share. Is it simply that those industries there have, is it a matter of economy of scale? Because it strikes me, you tend to look at a lot of the domestic industries that do struggle to combat imports, and it's due to things like labour costs. But we're talking about developed Western countries here.
Oh, for sure, yeah. No, look, we as a philosophy, we have nothing against international trade, and it's a good thing for economies. We're an exporting industry ourselves. We export significant volumes into Asia and New Zealand.
Sure.
The problem we have with imports is twofold. One is that consumers are happily consuming them without having any idea that the pig meat that they're consuming has come from the other side of the world. So there's a labelling issue and a recognition issue. And if they did have that knowledge, we believe they'd probably swing towards Australian product a bit more freely. Secondly, all of the countries I've mentioned that export pig meat to Australia are highly agriculturally subsidised. Okay. Australia is not. The OECD tells us that Australia and New Zealand are the two lowest government-supported rural nations in the OECD. And of course, there's huge evidence from them printed out every year about the amount of government support, what that value is to their industries. And that means they can afford to export pig meat onto the world market at much lower prices than they otherwise would be able to.
Yeah, because obviously the freight costs are quite high on that. So, labour costs in those countries are no different than here, but obviously that subsidisation is the big difference. How are we going export-wise with the pork at the moment?
Our export business has really taken a bit of a hit with the strength of the Aussie dollar. It's historically very strong. There's a lot of demand for Aussie dollars to buy our minerals. and that's not really helping our export business too much. Otherwise, it's still got basically strong future fundamentals, we believe. We're close to a lot of Asian countries with very heavy Chinese influence. They eat a lot of pork. The Chinese culture is very strong on pork. A lot of those economies over the longer term are increasing in their wealth. We know that with wealth comes higher consumption of meat, things like that. So we are very well placed to service an increasing demand for pork in that part of the world. It's a long-term issue, though, and it moves up and down in the shorter term.